This story is submitted by Rory Hall from his podcast he did with Turd Furgeson, or also known as Craig Hemke. The 50-day moving average in gold has turned up and has bullishly crossed through the 100-day moving average. It has also bullishly crossed through the 200-day moving average. It's almost now like the HFT hedge fund programs have been flipped from sell every rally to now buy every dip, because the technical picture is good. Craig Hemke on Shadow of Truth. There's debate raging in the precious metals community if and when a big raid on the precious metals market will continue. Today, for instance, gold has drifted higher overnight trading, only to be smacked pretty hard when the comex opened. That's nothing new. But what's new, given the way in which the precious metals market is set up, is that after being taken down $12 by the criminal traders on the comex, gold grinded higher until it was only down a couple of bucks by the time the stock market closed. Even more interesting is the fact that the mining stocks, HUI, AMX, Gold Bugs Index, rejected repeated attempts to put them negative on the day and finished up over 6 points, 3.6% on the day. The trading pattern of the precious metals sector, at least for now, has defied all expectations on the market, given that the technical factors in place have historically ushered in a vicious takedown of the sector. This data I refer to when I talk about the bank picture, whether it's the Commitment of Traders report or the Bank Participation report, it's all dubious crap anyways, because it's generated by the criminals at the CFTC. When they crank out these reports, we're supposed to take them seriously in the first place. The CFTC is criminal co-conspirator in the precious metal manipulation scheme. Craig Hemke's Shadow of Truth. A big variable in the expectation of a big sell-off in gold and silver is the COT structure. As of last Tuesday, the commercial sector, which primarily the bullion banks, is net short 171,000 gold future contracts. The hedge fund segment of the COT is net long 104,000 gold future contracts. The other reportables and non-reportables retail trader segments make up the rest of the long side of the bullion bank short position. The net short of the bullion banks is 17.1 million ounces. Currently, the COMEX vaults are showing 377,000 ounces of gold in the deliverable account and 6.8 million total ounces. This ratio of short interest to the amount of physical underlying is absurd. Technically, it's illegal because Craig discusses in the interview the CFTC continuously defies the laws in place and enables the banks to skirt mandated position limits on the COMEX. What will happen if one of these hedge funds decides to stand for delivery? If just 50% of the hedge funds stand for delivery, while it's true that in any given delivery period that at most 1% of the long open interest stands for delivery, the laws of probability suggest that one of these days a significant portion of the longs will decide to take delivery. This will bust the COMEX. The markets at some point, the demand for physical gold and silver will break the system. Someday something will change and the confidence scheme will fail. Even uptick of gold increases the pressure on that confidence scheme, which is why the banks are fighting it so hard. In the end, they are just not going to be able to. And that was Craig Hemke from Shadow of Truth. That's Rory Hall and Dave Kranzler's YouTube channel. Thanks a lot, guys. Don't forget to enter the silver giveaway. We give away on the 17th. Comment, subscribe to enter. Thanks a lot, guys. Take care.